Last week, EURJPY, the Nikkei, 10-year JGB yield and gold reached their convergence points. Congratulations to those who were able to secure profits. Now, let's take a look at the financial market outlook for the week of March 23rd through 27th, 2026. How will the markets move this week? Let's take a closer look. The Iran war is finally showing signs of coming to an end, and this week USDJPY may enter a pullback scenario. Before we begin, a quick note on the model. This forecast uses 200 weeks of global market data and AI-assisted statistical analysis. It does not predict geopolitics, only where prices tend to converge over time. Based on these statistical dynamics, here are the projected convergence levels for this week. USDJPY is 157 yen and 6 sen. EURJPY is 182 yen and 89 sen. AUDJPY is 110 yen and 8 sen. GBPJPY is 210 yen and 68 sen. The Nikkei 225 is 52,878 yen. The Dow Jones is $46,403. 10-year JGB yield is 2.2%. Gold is $4,688. These are statistical convergence zones, not directional forecasts. It has now been 3 weeks since the United States and Israel began their attacks on Iran. As mentioned in last week's analysis, the current actions of the Islamic Revolutionary Guard Corps suggest increasingly erratic and desperate behavior, including attacks on oil facilities in the Persian Gulf and threats to block the Strait of Hormuz, essentially lashing out at surrounding regions. However, it is unlikely that this situation will persist for long. This is because a U.S. amphibious assault ship is expected to arrive around March 22nd, bringing the potential occupation of Karg Island, one of Iran's key strategic hubs, closer to reality. Once this phase is reached, the military balance could shift decisively, and the conflict may rapidly move toward de-escalation. In other words, a scenario in which the conflict ultimately ends in a ceasefire is gradually becoming more realistic. Iran's foreign minister, Abbas Araghchi, stated on March 20th that Iran would allow passage through the Strait of Hormuz for Japan. However, Iran's internal power structure itself is currently in a state of fragmentation. That said, his remarks cannot necessarily be taken as the unified position of the entire Iranian government, and it may still take time before safe navigation through the Strait of Hormuz is fully secured. Meanwhile, what deserves particular attention is Japan's diplomatic effort. Securing a statement from a senior Iranian official allowing passage through the Strait of Hormuz is, in itself, a significant achievement and should be highly valued. Furthermore, the Japan-US summit held on March 20th, along with the G7 joint statement led by Japan opposing the blockade of the Strait of Hormuz, reflect a high level of strategic precision in diplomacy by Prime Minister Sanae Takaichi and her team, an approach that is gaining recognition in the international community. At the start of the week, Japan's stock market is likely to open sharply lower, following the downward trend in U.S. equities triggered by Iran's attacks on Middle Eastern oil infrastructure. Based on after-hours trading, the Nikkei 225 is expected to open around the 51,300 level. One of the key focal points this week is crude oil prices. As of March 22nd, oil CFD prices in after-hours trading have risen approximately 4% to $98.98. Tensions remain elevated, and the situation is still highly uncertain. What investors should be cautious about here is the triggered sell-off engineered by the market. If the Nikkei falls below the 50,000 level, potentially triggering panic selling among retail investors, technical analysis suggests a possible decline toward the 48,000 range. In this phase, maintaining composure will be critically important. Now, turning to the foreign exchange market. Rising oil prices are fueling inflation concerns, pushing global interest rates higher and widening the interest rate gap between Japan and the United States. As a result, USD/JPY has climbed into the 159 range. However, Bank of Japan Governor Kazuo Ueda adopted a relatively hawkish stance during last week's post-meeting press conference. Additionally, market concerns about potential currency intervention are intensifying. Taking all of this into account, USD/JPY is unlikely to continue rising in a straight line, and is more likely to shift into a phase where upward momentum is capped. Please note that the market outlook presented here is estimated using a stable convergence model based on statistical analysis. We accept no responsibility for any investment results derived from this forecast. That concludes this week's Global Financial Market Weekly Outlook. Thank you very much for watching until the end.